Hi everyone and welcome to our lecture on the introduction to risk management in capital markets. So, may question no, why is risk management important? So sabi nga dito no, capital markets are inherently volatile and subject to various uncertainties from market fluctuation to geopolitical events. Without a strategic approach to risk, investors and financial institutions may face substantial losses. So alam naman natin in the capital market talagang mataas ang risk no. Talagang sabi nga dito volatile, minsan mataas ang performance ng stock market, minsan mababa ano. So therefore, as an investor or financial institution, we have to take care of our money and we have to ensure na na-minimize natin yung risk. In general, no, we cannot prevent losses eh. No? We cannot prevent losses, pero kaya natin i-minimize. Okay? So what is the key objectives of risk management? First is preservation of capital. So the primary goal is to safeguard invested capital and asset, ensuring long-term sustainability of portfolios. So syempre, no, once you invest kasi in the capital market, syempre you invested money no as your capital and your goal is to ensure na maintain mo or na preserve mo yung capital na yon. The next one is optimization of returns. Striking a balance between risk and return is essential to achieve optimal financial performance. So dito no is minamaximize natin na yun nga na makakuha tayo ng gains pero we try to also minimize the losses no. That's why we try to balance between risk and return. Enhance decision making. No? Informed risk management enables better decision making as it considers potential challenges and opportunities. So sabihin natin investor ka, nakita mo na merong possible downfall sa capital market. So what you're going to do is to sell, of course, your stocks no or bonds no. Na sa ganun ay ma-minimize mo or ma-prevent mo yung losses. Or on the other hand, if you see na possible magkaroon ng bull market, no? Pag sinabing bull market, ito yung parang pagganda ng performance ng isang stocks, no? Then you might have additional investment on that specific stocks. Various risk management tools and techniques. So sabi dito, no, we have different tools. First is, let's try to again define risk management. It involves a spectrum of tools and techniques, each designed to address specific aspects of financial risk. These tools range from basic risk avoidance or strategies to more complex derivative instruments. So sabi nga dito sa risk management, meron tayong way to avoid the risk, no? May mga basic way to avoid the risk or meron ding mga complex way or higher strategies which is the derivative para mawala or ma-minimize yung risks. So these are the traditional tools. First is the stop loss orders. So dito, no, a common tool among investors wherein these orders automatically sell security when its price falls up to determined level, limiting potential losses. Sabihin na natin, no, parang nag-determine ka na, kunyari, no, from 50 pesos, nabili mo yung stock, no, and then suddenly, no, na loss na siya into 30 pesos. Automatic, no, parang kailangan mabenta mo na yun dahil nga ayaw mo nang dumating sa point na yung value will turn to 20 pesos, 10 pesos. So, you already stop, no, the losses. Nang sa ganon, nung nabili mo siya ng 50 pesos, edi ang loss mo lang nun is 20 dahil nga nagkaroon ka na ng predetermined price to sell the stocks. Next is diversification. While discussed in more detail later, diversification is a foundational strategy spreading risk by investing in a variety of assets. So, kunyari, mag-invest ako sa industry ng food industry, sa electronic, sa real estate, sa iba't ibang industry, no, sa healthcare. So ngayon, if ever malos yung, let's say, no, the food industry had a downfall and then suddenly the healthcare increases, so na-offset yung losses, no? So yun yung nangyayari sa diversification. We are trying to spread the the your investment so that once one investment falls down, and there might be a possibility that the other will can able to offset those losses. Derivatives as advanced strategies. So we have the options, which is provide the right but not the obligation to buy or sell an asset at a predetermined price, offering flexibility and hedging opportunities. So dun sa option, may kontrata na pag pumunta sa ganitong presyo, it's either pwedeng ibenta or bilhin nung nag-invest, no, dun sa derivative yung stocks, no. Future contracts oblige the buyer to purchase or the seller to sell an asset at a future date at a predetermined price, used for speculation and hedging. So sabihin na natin, kung binibili mo yung milk product, let's say ng milk product ng per gallon, let's say ng 20 pesos, no? At sa 20 pesos na yun, ay enough na yung profit mo. So you can enter into a future contract. Nang sa ganun, malaki yung price into 20 pesos. If ever there will be an increase in price, ang magsha-shoulder na nun is yung investor. No? Pero pag bumaba naman to 20 pesos, 20 pesos pa rin ang bibilin mo na per gallon ng milk, pero yung sobrang presyo, ibibigay mo dun sa investor. Pero at the end of the day, at least, alam mo kasi sa 20 pesos na yun, you have already sufficient profit. Risk management in market, credit, and operational context. So, market risk management. It involves strategies to address risk associated with market fluctuation, including the use of option, futures, and sophisticated modeling techniques. So, kagaya ng sinabi natin kanina, no, may mga way on how we could able to deal fluctuation, katulad ng derivatives, no, ng stop loss orders, diversification. So, yung pag-fluctuate kasi, yung pagtaas-baba, no, is really something happening in the capital market. Of course, credit risk management, no, focus on minimizing the risk of default by the counterparties, often involve credit ratings, collateral, and credit derivatives. Dun sa credit ratings, for example, no, may kumpanya na mangungutang, so nakikita natin na kung ang credit rating niya ay mababa, it means na hindi siya ganun ka-credible na magbabayad or possible na risky, no, na magpautang dito. Collateral, pag hindi siya nakabayad, ay meron tayong kukunin na asset from that specific company, no? And credit derivatives, no? Pag hindi siya nagbayad, possible na may sumalo na investor na utang na yun, no? Which is the credit derivative. Operational risk management addresses risks arising from internal processes, system, and human factors, employing strategies to enhance operational resilience. So, normally kasi class, no, sa mga businesses, meron silang operations kung saan meron ditong risk. Now, for example, in the food industry, when I used to work, one of the risks is the wastages. Kasi possible you ordered supplies from materials and then suddenly, no, it it perish, no, because of overstocking, or possible there's a low demand for the product. So of course those losses is going to affect the profitability, which will also affect the investment of the investors. Innovative risk management approaches. So here we have the algorithmic trading. It utilizes algorithms to make rapid trading decisions based on predefined rules, minimizing human error and emotional reaction. Doon sa algorithmic trading, nakikita natin, no, paano ba yung magiging future behavior ng stocks, so tataas ba yan, bababa. So meron silang way to determine na, kunyari, no, nakita nila ito na yung peak, no, possible na bababa na yan, 'di ba? Parang ganun. So, once na na-reach na to, possible mag-sell na sila ng mga stocks nila. Big data analytics extract meaningful insight from large data sets to identify potential risks and opportunities. So normally, yung mga data no, that comes from the capital market, from the SEC, no, or even from the different research firms, nagagamit yon para malaman kung meron na bang potential risk or merong potential opportunity. So pag sinabi potential risk, syempre, possible mawala no, yung investment mo. So you have to find means to stop the losses or to prevent the losses as well as opportunities. Let's say nakita ka na tataas yung stock prices, no? So habang mababa pa yung stock prices, you have to already buy it so that you could able to benefit from those rising of prices. Consideration for implementation. So we have the cost-benefit analysis. We have to assess the effectiveness of each tool relative to its cost and potential impact on returns. So pag sinabi natin cost-benefit, no, kung ako ba ay gagastos, no, for this investment, ano ba yung magiging benefit ko, no? What will be the benefit? Would I, if I invest in this financial instrument, what will be the potential return, or what will be the potential losses. So this could be something that we have to analyze dahil nga talaga importante na nalalaman natin yung pag meron tayong linabas na pera, ano ba yung magiging benefits nun. And adaptability, no? Markets evolve and so should risk management strategies. The ability to adapt to changing conditions is crucial. From the keyword adapt, no, once na there are changes, we have to also change our strategy. Hindi pwedeng yung strategy mo from the start is the same strategy until the end. No, we cannot do that in the capital market. We might use derivative, we might use stop loss order, we might use diversification. So it depends on the situation. So what is the importance of diversification and hedging? First is diversification is a cornerstone of risk management, representing a strategic allocation of investment across different assets, sectors, and geographical regions. So nasabi natin kanina yon na ina-allocate natin yung mga investment natin into the different assets, pwede rin sa sector or industry, at pwede rin iba't ibang lugar, no? Pwedeng other countries, ganun. It aims to reduce the impact of poor performing assets on the overall portfolio, mitigating concentration on risk. So what are the key aspects of diversification? First is asset classes. You have to spread investment across diverse asset classes such as stocks, bonds, real estate, and commodities. So, ang gagawin ko, mag-invest ako sa stocks, meron din akong bonds, meron din ako real estate, and commodities. Sa ganun, pag bumaba tong stocks, may sasalo sa'yo yung bonds or yung real estate. Diba? This could be some examples. Next is geographical diversification. Allocate assets across regions to limit exposure to country-specific economic or geopolitical risk. No? Mag-invest, for example, ako sa Japan, mag-invest ako sa Pilipinas, sa Taiwan. No? So if I see that the geopolitics is risky in that region or that country, then I might transfer my investment to other countries. Industry sector. Avoid concentration in particular industry, preventing a significant impact from sector-specific downturns. So for example, no, kagaya ng sinabi ko kanina, food industry bumaba. So since you invested also in the healthcare, then tumaas yung healthcare, then you benefit from the healthcare and you try to offset no the losses that you got from the food industry by the industry of healthcare. Benefits of diversification. So we have the risk reduction by spreading investment. The impact of poor performance in one area can be offset by gains in others, reducing overall portfolio risk. So dito nakikita natin na yun nga, nakakaroon talaga ng reduction sa risk once we do diversification. The next one is stability. Diversified portfolios are often more stable and less susceptible to extreme fluctuation. So kahit na mag-fluctuate na ganyan, dahil diniverse mo nga, no? Yung asset classes mo, yung geographical diversification mo, yung industry mo, so nagkakaroon pa rin ng stability. And enhance return to risk ratio. So striking a balance between risk and return, diversification aims to optimize risk and return profile of the portfolio. So kumbaga, dahil nga nada-diverse mo yung asset mo, yung geographical mo and industry mo. So, yung return to risk mo is na-enhance, no? Kumbaga, nami-minimize natin yung losses and we could still able to gain no, from those losses. So, hedging as a risk management strategy. So, sabi dito, no, hedging involves taking position to offset potential losses in the value of an asset or investment. So, from the keyword offset, no, na parang yung isang losses na sasalo ng ibang asset or investment. So, common hedging instrument, derivatives such as options and futures are frequently used to hedge against adverse price movements. So, common talaga yung derivatives na ginagamit pag may mga pagbabago sa prices. Example, a portfolio manager concerned about potential market declines might use options to protect against losses while maintaining exposure to potential gains. Strategic implementation of hedging. So here, no, we're trying to do tailoring to objectives, which is hedging strategies should align with investors or institution risk tolerance, time horizon, and overall investment objectives. So depende kasi guys sa objective ng investor, no? Kasi may mga investor na conservative, may mga investor na risk taker. So we have to know ano ba yung objective no? And also the time horizon, no? Sometimes the investor wants to invest his money within 5 years, sometimes others within 10 years, so it depends. And also the cost benefit analysis. We mentioned here this thing a while ago, which is assess rather the cost of hedging against the potential benefits. Baka mamaya, no, nag-derivatives ka, nagbayad ka ng premium, pero mas mataas pa yung premium kaysa sa potential benefits. So, you have to analyze that. Real-world examples. 2008 financial crisis. Diversification and hedging played a crucial role for those who successfully navigated the crisis, protecting the portfolios from substantial losses. Another one is COVID-19 pandemic. Investors employing diversified portfolios were better positioned to weather the market volatility induced by the global pandemic. So, nung 2008 financial crisis and even COVID-19, talagang nagamit yung hedging para para malabanan yung market volatility o yung pagbaba at pagtaas ng presyo. Risk assessment and management by investors. So here we have sabi nga dito, no, successful risk management begins with a thorough understanding of an investor risk tolerance, financial goals, and time horizon. So investors must assess both quantitative and qualitative factors to create a personal risk profile. So kagaya ng sinabi ko, depende yan sa investors, no, may iba't iba silang risk profile. So later we're going to talk about that. So identifying and quantifying risk. So first is the word market risk. So you have to assess the potential impact of market fluctuation on the portfolio. So kunyari, no, may mga different assets ka na nag-invest ka at yun nga, merong mga fluctuation na nangyari. Ano ba yung magiging overall impact nun dun sa portfolio of investment mo? Are you going to still gain? Are you going to have minimal losses or you're going to have big losses? Credit risk, no? You have to evaluate the credit worthiness of the issuers and counterparties. So, kagaya na sinabi ko kanina, yung credit worthiness, ito yung reliability or credibility rather nung investor or nung issuers, no? Pagdating sa, yun nga, sa finance. Operational risk, we mentioned this also a while ago, which is it includes the processes, the system, and external factors that may affect investment outcomes. Let's say you are going to export products from one country to another. So the risk there is, of course, no, the time horizon na ma-transfer yun and risk na once na may mga pangit na weather condition, so pwedeng, yun nga, no, ma-loss yung mga i-export natin. Tailoring portfolios to risk performance. So here we have conservative investors, which is emphasize stability and income, favoring low-risk assets like bonds and dividend-paying stocks. So yung mga conservative investors, ang kanilang goal is stability and income. So normally, they focus on bonds at yung mga dividend-paying stocks. Next is moderate investors. So seek a balance between risk and return typically diversifying across the asset classes. So dito, no, mas mataas naman siya sa conservative, pero binabalance niya pa rin yung risk and return. And the last one is aggressive investors. So these accept higher levels of risk for potential of greater returns, often favoring equities and alternative investment. So dito is nakikita natin na yun nga no, na yung investor is talagang okay lang sa kanya na magkaroon ng higher level of risk kasi nga gusto niya talagang magkaroon ng greater return. So, therefore, talagang mas nag-i-invest siya sa mga equities kasi ito yung talaga yung mataas yung return pero mataas din yung risk. So, we have these risk management strategies for investors. So, first is the dynamic asset allocation wherein you're trying to adjust asset allocation based on market conditions and economic outlook. So, dito, no, kung nakikita mo mas, yun nga, no, mas nagiging trending yung other assets or yun nga, medyo bumababa yung market no, sa isang sector or industry, then you could able to adjust no, yung mga portfolio mo. Nang sa ganon is hindi siya maapektuhan nung economic downturn. Another one is regular portfolio rebalancing. Kasi hindi naman pwede na kung ano yung portfolio mo is same lang, no? So sometimes you have to periodically reallocate assets to maintain the desired risk and return profile. Kaya kailangan talaga minomonitor natin yung market condition. Use of risk management tools, no? Employ tools like the stop loss orders, we mentioned that already, the derivatives, to protect against the downside risk. Okay? So what are the role of financial advisors? No? Financial advisors play a crucial role in guiding investors through the risk assessment process. So as financial advisor, dapat sinasabi nila ano ba yung mga possible risk and possible return in investing in specific asset. Also, advisors help align investment strategies with investment or individual risk profiles, no? Kung yan ay, ayun nga, conservative, dapat pina-tailor fit na yun, no? Yung financial advisor. And also, no, what are the challenges in risk management for individuals? So, first is the emotional bias, no? Investors may take decisions based on their fear or greed, deviating from their planned risk tolerance. Kasi for example, no, biglang yun nga, gumaganda yung market, tumaas yung value ng asset. So, parang, ay, may pera pa ako dito, invest ko lahat. So, nagkakaroon dun ng greed factor, which sometimes to affect the, yun nga, yung risk tolerance. No? And then, suddenly, biglang bumaba. So, ayun, diba? And then, of course, the lack of information. So, limited access to information may hinder investors from making informed risk management decision. Remember, no, pag yung mga data kasi ginagamit yan for informed decision making. So, para at least yung mga decision na gagawin ng mga investors are based on the data. Let's proceed with the risk assessment and management by financial institution. So first is of course, no, financial institution operate on a larger scale compared to individual, no, managing diverse portfolios and serving a multitude of clients. Effective risk management is crucial for maintaining financial stability and ensuring the integrity of the broader financial system. So, ang mga financial institution, no, for example, the banks, the government-owned corporations, no? So, this could be some of the financial institutions na talagang kailangan is ma-manage nila yung portfolio nila on a larger scale. So, robust risk management framework. So, we have the regulatory compliance, no? Financial institution adhere to regulatory requirements, ensuring compliance with guidelines that aim to maintain stability and protect investors. So, sa Security and Exchange Commission, meron siya mga provision that protect yung mga investors natin. And also stress testing, no? Regularly subjecting portfolios to stress scenarios help institutions assess the resilience to adverse market condition. So, chinecheck nila, no, what if, no, biglang okay naman yung market today and then suddenly mag-down, ano ba yung magiging impact nun? So, that is an example of stress testing. And there are also systemic risk consideration. First, no, let's define what is systemic risk. No? It refers to the risk of widespread financial instability, often triggered by interconnected failures within the financial system. So, meron kasing mga domino effect, no? Once, let's say, a certain asset, no, goes down, no? Could be, let's say, the oil prices may affect also the other industry. So, it depends on the asset. And of course, we have the mitigation strategies. So, financial institutions implement measures to reduce systemic risk, including diversification, prudent risk practices, no, and collaboration with regulatory bodies. Kasi yung mga regulatory bodies, no, the Security and Exchange Commission, the bank, central bank, has this influencing power to do monetary policy that will also affect the performance of the investments. And of course, we have the portfolio management strategies for institution. So we have no asset liability management, which is the balancing the institution assets and liabilities to ensure stability and meet financial goals. So dapat mabalance natin yung mga assets at liability natin kasi pag mas marami yung liability, then of course na possible that this company or financial institution is at risk. We need to also do strategic asset allocation, aligning investment portfolios with long-term objectives and risk tolerance. So, dapat yung mga assets natin na nilalagay sa mga assets, no, sa mga different equities, align yan dun sa long-term objectives natin. Ano ba yung target gains natin? Ano ba yung maximum losses that we could gain, no? So, we have to align that. Liability-driven investment or the LDI. So focusing on assets that match future liabilities such as pension obligation like mga SSS, GSIS. So syempre, they are getting contribution from their from people. So therefore, dapat pina-forecast nila kung kaya ba nilang bayaran yung mga pension once those people who contributed to them already reached the 60-year-old age. So what are the risk management technologies? So we have, of course, the advanced analytics. So utilizing sophisticated data analytics to identify, assess, and mitigate risk. So meron na tayong mga technology na nakikita na, ay, ito, bababa na to. No? So parang nagkakaroon siya ng notification to those financial advisor and investors that, you have to do something or you will experience losses. So that is mitigating risk. And of course, we have also the AI and machine learning, which is enhancing risk prediction and decision-making processes through automation and predictive modeling. So dahil nga doon sa AI and machine learning, mas nape-predict natin ano ba yung possible mangyari and we could able to decide on that. Kasi once we have this prediction, then we could able to say, oh, stop loss tayo or oh, diversify tayo or oy, ano tayo, no? Additional tayo, no? Kasi nga, we have this mga risk predictions.